And hello, everyone. Welcome to Power Scanning Session. It is August 23rd, and once again today, we will be looking for the most interesting swing trading setups for the week and the weeks ahead. My name is Daniel Sinek, and I'm greeting you today once again from our beautiful office here in Montreal with a nice, beautiful white wall behind me. I hope you can still see me properly. And yes, I am back in Montreal. I was in Europe for 2 weeks, but got home about 2 days ago. Yes, and now we're finally back here in our headquarters in Montreal. But before we get started with today's session, where are you guys calling in from? Please share your location with me in the Q&A box. Who do we have today? We have Gerd from Coesfeld in Germany, Lenny from New York City. Hey guys, Aubrey from Mucky, Cyprus. Yeah, Mucky, I remember that. Hot and yeah, humid. Ralph from Jockgrim, Germany. Hey, Ralph, nice to see you. Ralph sent me an email earlier on today. Good to see you, Ralph. Andrea from Hamburg. Hey, Andrea, how are you? Niels from Basel, Switzerland. Hey there. Irvin from Atlanta, Georgia. Hey, Irvin, how's it going? Maria from Portugal. How are you there? Gennard from Vienna. Hey, Gennard, how are you? Keith from the border of Scotland. The border between England and Scotland. Hey, Keith, nice to see you. Stefan, also from Hamburg. And from Hamburg. Wow, always Hamburg. Strong presence in these webinars. Awesome. And yeah, that's it. Perfect, guys. Well, thank you so much for sharing your location. It is actually going to be just me today. Niklas is not able to make it, but this will not stop us. All right, so let's get into it. Once again, today we will be looking for so-called swing trades. So these are not day trades, which you might be opening and closing within the same day. These are not long-term investments, which you may be holding for years or maybe a lifetime. No, these are swing trades. The typical duration for a swing trade is between 2 and 20 weeks, give or take. And what we will be doing today is to show you our process of how you can find interesting and promising swing trades in just a few minutes. We call this the 30 minutes Sunday strategy. But it's a bit of a misnomer. It's something you can do on any day of the week, really, because of every day when the market closes, new data will come into our scanner, which will allow you to find new interesting setups. All right, but of course, sometimes, you just want to take some time on the weekend, lay back, have a nice cup of coffee, and look for what looks interesting for the next week ahead. Real quick to who we are. We are, of course, tradingindicators.com. My name is Daniel here on the left-hand side, and together with Homa, here in the middle, Homa is in Toronto today. We have built trading indicators from the ground up, and over the years, we have built thousands of trading indicators. This used to be our bread and butter, but we also now specialize in other trading tools, such as trading scanners. And one such trading scanner is our Liquidity View dashboard, which makes it very easy for you, hopefully very easy for you, to find what you are looking for, to find promising symbols, promising stocks to trade. We also believe that trading should be simple, and in fact, trading will be simple, but you need to know what to look for. And secondly, you need to use the right tools. The tools that we like to use for our own trading, we're going to showcase today. Also, guys, if you have any questions, please don't be shy. Put your questions into the Q&A box, and I will look at them every once in a while as I go through this presentation. All right. A quick reminder before we get into it that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance or really anything based on historical data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, a couple of housekeeping items next. First off, we do have a bootcamp available where we detail every single feature of our dashboard. Why do I say this every time? Because what we are doing here in these scanning sessions really only uses one small part of the dashboard. There's so much more in there. If you want to know all about it, check out our bootcamp at tradingindicators.com/bootcamp. And in fact, let me quickly paste this into the chat box as well. There we go. 1 second. All right. So check out the bootcamp. Also, we do have a Discord channel available at tradingindicators.com/Discord. It's completely free and a nice starting point to exchange ideas and charts and setups with our trading community. So check it out at tradingindicators.com/Discord. And of course, what we will be using today is our Liquidity View dashboard, which, as you will see, allows you to find these interesting swing trading ideas in just a few seconds. So it would be best if you follow along, in fact, and you can do so even if you are not a subscriber yet by taking advantage of our 7-day or 1-week trial for the dashboard available at tradingindicators.com/view. And this one is also pasted into the chat box. And last but not least, of course, if you do so, you will get instant access. You don't have to wait for half a day or something. You will get access instantaneously as soon as you sign up. And the first week is completely free, no commitment within the first week. And afterwards, we have interesting monthly and yearly options. And lastly, we also have written an ebook called The Power of Three, where we detail our the most interesting setups that we typically trade a bit further. Check it out at tradingindicators.com/power of three. All right. So, and one last thing, of course, what has driven the development of the dashboard is your feedback. So most of the features that we have in the dashboard right now, such as new scans, new filters, support for dividends and earnings, different languages, error reporting, trading notes, and so forth and so forth. These were all suggestions that came from you guys, from our users. So if you have any further suggestions, please don't be shy. Put those into the Q&A box or send me an email afterwards, and we'd be happy to integrate those if it is possible. All right. So now, without further ado, let's get started with our market review. Oh, boy. What an interesting Friday it was, wasn't it? In the aftermath of the Powell speech in Jackson Hole, with the announcement that it is likely that interest rates will be decreased. The market spiked up on Friday, and how this materialized itself on the price charts, let's check it out right now. So I'm going to switch over to our dashboard. You can see it here. And we're going to start off with a symbol that we always start off with because it grounds us. It gives us a good idea of what the market overall is doing. It's the SPY, the S&P 500 ETF. And what do we see here? Let me just quickly hide my beautiful trend line here. There we go. So what do we see here is that, yes, we did have a level 3 pullback up until Thursday. You can see it here in Trend Radar. The first three rows were right. This happened a few times in the past before, and every time this happened, this was a great opportunity to enter into the long direction in the anticipation. Yes, we may be seeing that prices will be bought up again and prices are reversing to the upside again. And exactly this has happened on Friday. Some markets were down. In fact, it was quite a down week so far. Every single day pretty much was a down day. But on Friday, things turned around and we even made an all-time high in the SPY. Of course, prices then closed a little bit lower from that. But nonetheless, this level 3 pullback could have been, of course, could have, would have, should have been a good opportunity to potentially go or look at a long position in the SPY. Now, of course, prices are once again extended. We are at all-time highs, which historically speaking, oftentimes do act a bit of as a resistance. So I'll be careful right now to enter along at this point in the SPY. I rather wait. And of course, you know this already. If you have been following us for a while, I rather wait for prices to come down a little bit for a correction and then enter in the direction of the overarching trend. And of course, the overarching trend of the SPY, what else could it be, is bullish. If you scroll back a little bit here on our chart, we can see that the SPY has been bullish since May 2023. And interestingly, and I mentioned this before, this bullish trend sentiment has not changed during the pullback here in 2023, but also not during the tariff wars of April this year. You can see it here, a big correction to the downside, yet MA rush, which is the indicator which shows us these trend labels on the chart, has not changed its mind. And this is completely by design. This is an indicator which has been coded and implemented to be as conservative as possible. And it will only swing to bearish or change to bearish if everything lines up and if there's compelling evidence that indeed we change trend direction, which of course was not the case here. This was a correction. Prices immediately were bought up and now we're trading at all-time highs. So it was a good decision not to change sentiment. So how does it look in the QQQ? Let's have a quick look. The NASDAQ 100 ETF. There we go. Pretty much the same picture as in the SPY. And in fact, we now have a beautiful TI pairs indicator where you can do a correlation analysis. And oftentimes the correlation between the SPY and the QQQ are on the 90 percentile. Super highly directly correlated, meaning when one symbol goes down, the other one will go down too. And if one symbol goes up, the other one will go up as well. And exactly this is what we are seeing here right now. We did have up until Thursday a level 3 pullback. You can see it here in Trend Radar. Yeah, 3 red rows here. The rest were green below this. And then on Friday, things reversed back to the upside. But interestingly here, I mean, I'm not sure how really interesting it is, but interestingly to me at least, is that we are not yet at the all-time highs in the NASDAQ. And perhaps, if I had personally to pick a symbol to trade and potentially to go long, if somebody, says, hey, Daniel, gun to your head, even though I wouldn't go long now, I would wait for another correction, but gun to your head, go long QQQ or SPY, I probably would put or take the QQQ. Why? Because it has more room to go to the all-time high. So there's a bit more room left, not really much, like 10 points, but a bit more than the SPY. So I believe you're probably going to see all-time highs in the QQQs next week. So I probably would pick that symbol over the SPY because, as mentioned before, oftentimes the all-time highs level acts a bit as a resistance level and prices may bounce off from it. All right. So that was the SPY. What about gold? Oh boy. Gold is interesting. I'm going to open up Trading View in a second as well, but gold did exactly as we discussed it last week. Who remembers what we discussed? Well, let me remind you real quick. So what have we been saying for, I don't know, the last 2, 3, 4 months when it comes to GLD gold? Every single time we're getting close to the first MA rush line. Prices pull back towards this first green line here. What do we see? An almost immediate reversion of price to the upside again. So correction down here to the first MA rush line, reversion. Correction, reversion immediately. Correction, reversion, correction, reversion, correction, up again. And once again, we discussed it last Saturday. Yes, prices were exactly at this point here, a correction down to the first MA rush line. And what happened? Well, we touched it a little bit and then we reversed back to the upside. I would not be surprised personally if we make next week another attempt at the all-time highs here. What will happen then? We will see, because this resistance level, this green cluster here, this level and this level above, this is a very strong level. You can see how many times price attempted to go after this level and was not able to break it. Here, with a nice liquidity capture, this event which happens, which increases the likelihood of a bounce. Here again, is a lower attempt. And I think once again, we may see another attempt at the all-time highs, and then it's going to be interesting to see. Can we break it? I think eventually it will be broken, or perhaps will be bounced again. Would I personally go short if I see a liquidity capture and a candle approaching this resistance level? Ah, boy, I'd be careful of this. Personally, I mean, at the most, perhaps some put options with limited risk, because gold is just too bullish. If you look at how the gold price has developed over time, this is probably pretty much a straight line up. But of course, lately, it's been rounding out a little bit. You can see, we are not making higher highs anymore, at least not in the latest history. And in terms of higher lows, yeah, I guess a little bit. We're still doing this, but this area now is very condensed and it needs to be broken for an acceleration to the upside. All right, so that was GLD. Let me quickly see if there are any questions so far. I'm going to get to all these in just a bit. Okay, perfect. Now, moving on, what else do we have? We typically also talk about gold with the United States Oil Fund, USO. All right, so let me open up this symbol. I'm going to keep it very quick here because nothing really changed. Prices are still trapped, so to say, in between support and resistance. And at least for me, for my trading style, this symbol will become interesting again once we are approaching an extreme. Meaning, once prices become closer, get closer to the resistance level here on 81, 83, or down to the support level around 63 or 60. Then that's when things get interesting because we may see a significant bounce off this level. Now we've seen it here, especially bounces off this resistance level over and over again. Up to this level and bounce, up to this level, bounce, up to this level and bounce. This actually was our trade of the week at some point. And now we're right in the middle. Things will get more interesting as prices will approach either this level up here or this level down here. So for me, at least the way I look at it, it's pretty much a coin toss as to where oil will go. And I'm just going to wait. I let the market decide as to where it wants to go. And once it gets to a key level, then potentially we will act on it. But for now, I will stay on the sidelines when it comes to oil. All right. And one more, of course, we do have Bitcoin. Yeah, Bitcoin made all-time highs, not last week, the week before. And then we saw a very sharp reversion to the downside. Something that could have been predicted because it had all the signs of a classic bounce setup. It was approaching key resistance. This green line here was known all the way back here on August 1st. Then prices came up to this resistance level. It went a little bit above, but couldn't completely clear it. And we had a series of liquidity captures. You see these little shaded areas here? These are liquidity capture events. Oftentimes, something which will increase the odds that a bounce off this level is more likely than a break through this level. Then what happened? Well, we bounced, of course. And then this week, where did we go? We went right to this support level down here. And guess what? Today, in fact, yesterday, we saw a bar. We did see a liquidity capture as well. And prices bounced off the support level once again. So, wow. Very predictable how Bitcoin trades. And it looks to me that next stop will be once again this resistance level. Then we're going to see whether we can break it. I think if we break it, we're going to see another acceleration to the upside, or if we're going to bounce off from it. So it's going to be very interesting to see. And of course, a liquidity capture event is always going to be an interesting tell as to whether a bounce will happen or a break will happen. All right, perfect. And now, of course, and thank you for all your questions. I'm going to get to those a bit later. Now, I would like to review a couple of things that we called out during the last sessions because some things worked out quite nicely. I'm going to start off with an interesting symbol. Let me just go here. And oops, let me go to my watch list from last week. And in fact, which one did I? Give me 1 second. This was not the right one. Also not. Well, actually, let's start with Brookfield Corporation. This was our trade of the week, I believe, either in our newsletter or during our lunch and learn session on Tuesday. I can't remember now where it was, but it is finally doing what we hoped it would be doing. This one had, you can see it here, the classic zone break. This was here, retrace setup, and now finally things are developing to the upside, of course, boosted by Friday's price action. So I think here I'm quite hopeful that we're going to approach this resistance level perhaps in the next week or the next 2 weeks. And the other one I wanted to mention real quick, and I cannot remember what it escapes me for a second, but I can find it real quick. Let me go to my scanner here, because what we're going to do, I was going to do a quick search because, as you know, it's very easy to search what you're looking for our dashboard. There we go. WW Granger, as it may be pronounced. Also, one of our trades of the week. I forget when it was. Definitely in our newsletter at some point. Look at this one. This is exactly how we planned it out. A beautiful recovery of this correction We called it out down here when prices approached this support level down here, and we called it out because that was a huge gap to be filled. And guess what's happening right now? Because everything came together here. Stock which was bullish for a long time. You can see it here. Prices have been bullish. A couple of corrections along the way, but every time there was a correction, it was quickly bought up. Then we had such a corrective move. Prices bounced to the downside with a significant gap. Where did it go to? Right to the support level with a liquidity capture event. And remember, we called this one out saying, hey, this has all the ingredients of an interesting bounce trade, a gap to be filled. Our prices is near support, a liquidity capture event, and a long-term uptrending stock. And look what happened here. A beautiful bounce to the upside. So this one worked out very nicely. So let's quickly review of what happened to our picks last week. Yeah, it's been a bit of a more challenging market situation, but I believe overall these picks will be just fine overall. So let's look at Lilly first. All right, and remember the theme that we talked about gaps a lot. So Lilly, I believe there was some announcements about a medication that was either pulled from the market or something has happened. So a big gap to the downside below this support level. And I thought, oh my God, just by looking at this one here, where would be our next stop? There's nothing below. That's just the abyss below. But then what we did, we looked to the left. We looked, hey, what levels did we have on the left-hand side? And we could see we did have this former resistance level from back here in 2024. It didn't expand all the way to the right-hand side, but it's still there. And prices stopped exactly pretty much to the T at this level. We bounced off from it. And now I believe we are on the path, and you probably know what I'm going to be saying next. We are on the path to fill this down gap here. Gaps tend to get filled over time. This happens a lot. I think prices will approach this level. And I think if we do, potentially we're going to pull all the way up to the 820 area. So this setup that we saw is developing quite nicely here in Eli Lilly. So so far so good. PWR, this was our trade of the week in our newsletter this week. Not much has changed here. We're still in the vicinity. A really interesting zone break retrace setup. We actually did get to our entry price here. Prices pulled down to the 368 area. And I think, we're primed to push higher. I like the fact that Emmy Rush, this first line here, this little jacket green line, and this key resistance level, they are lining up. So this is extra support at this point because resistance was broken, now acting as support. And I believe, we may see, or hopefully we will see a bounce off this level in the next couple of weeks. So this one still looking strong. TGLS, what's going on here? Yeah, so TGLS struggled a little bit, just a bit, but also interesting. Yeah, prices are right at this support level, went below a little bit, but now we are right at this level again. I think here we are still in good shape for a bounce towards this resistance level on top. So all good here, just a slow moving market as it sometimes happens in the summer. WSO Watsco, let's check it out here. Yeah, this one also struggling a bit. So our levels are a bit more shaky than they usually are, but I think we're still in good shape here. We went below on Thursday, Friday, we recovered. Now we're right at this level area here. And I still believe also this stock here has a good chance of reverting once again from this key support level. You can see it here back to the upside, but I do want to see it soon. So as the longer we're staying in this area, I think the less I will like this setup, because it looks to me we're kind of just grinding lower with lower highs and lower lows here. So I want to see this bounce happening fast. I want to go above at least this level here to have some extra evidence. Okay, we're going to go all the way to this key resistance level here to at 495. Welltower, what's going on here? Yeah, that was also a zone break retrace setup. Well, if you got the fill at this level here, I believe probably not, because we only called it out on the weekend. Monday opened, I believe. Monday opened here. Well, potentially you could have called it. You would be in good shape. And then we have strategy. Well, strategy suffered a little bit with Bitcoin retracing so much. And of course, these two symbols are to some degree correlated. We can see it here. We went below the support level, back up again, if you're still in this trade or if you didn't get stopped out, I think we are still in good shape here. I believe Bitcoin eventually will push to all-time highs, and this should also propel, Strategy Inc. to higher price levels as well. So far, so good. All right. So this was what happened last week. And one more comment I have, actually two more comments. One symbol that was mentioned to me by Aubrey offline in an email earlier this week. And hey, Aubrey, thank you for this. He was sharing some thoughts, was about Palantir. Let's have a quick look. So what's going on there? You may know about it if you own the stock. Of course, it's a very popular stock to trade these days. And actually, Aubrey alerted me, and he was inspired. I hope at least that's what he said in his email. He was inspired by our scanning session, or perhaps our lunch and learn session during the week, that we pointed out, oh, there is this little thing here. You can look at it a bit closer. What is this? Oh, this is a bad drawing. 1 second. There we go. It's a gap. It's a gap, and prices came above. We gapped up here. We made all-time highs. We just pushed away from our averages. But then there were some signs of, slowing down. And Aubrey told me, hey, he actually, acted on this. And he was being careful because he then anticipated, okay, it smells like this gap might get tested and filled. And exactly this is what happened. So Aubrey actually closed out, he told me, this position above the gap and got back into it after this big pullback in an anticipation. Yeah, okay, we had our pullback exactly to the first MA rush line here. And oftentimes this one acts as dynamic support, and now we may be in for another leg higher. Yeah, definitely an interesting stock, Palantir. And the other one I wanted to point out, because I talk about it a lot, I'm a bit disappointed by it, to be honest, is Sprouts Farmers Market. I was very encouraged by the nice bounce off this level. I can see it here. Oh, where did it go? Is this the right one? Yeah, Sprouts. 1 second. Where did it go? Give me 1 second. We'll open it here on TradingView. Sprouts. There we go. Okay. So what happened in Sprouts on the daily chart here? Oh, no, never mind. All is good. Yeah, we came all the way down to a key support level. You can see that also here there was this big high volume node. Prices bounced off on this level, and then they came up, and I was thinking, all right, we are in good shape now. Of course, this is a holding which I have in my portfolio. I sold some puts back here right before earnings, which are, of course, a bit in the minus right now. I'm still holding them. I think even if I get assigned, I'm going to keep this stock because it's in a very strong uptrend. But I do want this support level to be broken to the upside soon. Why do I say this? Because I didn't like the fact that prices sharply reversed off this level to the downside, showing me some kind of zone break retrace setup, a bearish zone break retrace setup where this support was broken. You can see it here. Prices initially go down, then retraced back up to this level, only then to go accelerate to the downside again. So I'm not so happy with this because this smells a bit more bearish now, but I'm going to hold on to it. But of course, if we go below this MA rush level, or perhaps this support level here, this former support level, I will be taking a close look at my puts, maybe closing them out, because this has now a bit of a bearish tone to it, even though, of course, the overarching uptrend is still super bullish. All right, so now, of course, we are here. I'm quickly going to go through some questions first. Then we're going to scan for new setups for today. So let me see if I can get my questions in here. All right, there we go. Okay. Lenny, can we adjust the columns in the scanner section? You can adjust them, yes, in the sense that you can use this column configurator here to either show them or hide them, but you cannot show the order. So you can add new price points to it, or remove them, or move new columns to it, but you can't change the order. Okay. I use TI matrix. There is a bar below that indicates the momentum of a. Is there a way to search first? I'm going to take this one away potentially for our lunch and learn session when we have more time to look at TI matrix. I'm also not exactly sure what you mean by this. Maybe send me a quick note afterwards. Oh, TI matrix, you said, not TI pairs. Yeah, Gert, let's take this offline. This is not on topic. What line is that? That's a line, I believe you mention these lines here, these lines on the chart. These are lines shown by our MA rush indicator, this indicator here, which basically shows some averages, higher time frame averages. And oftentimes, these lines can act as dynamic support. They will also show you how far prices are extended from price sometimes, when oftentimes it's not a good idea to go long. If prices are very far away from the averages, this is not where you want to get into it. All right. Just to remind me, the trend indicator correlates with the liquidity capture, or am I reading this wrong? It does not add. So MA rush is independent of liquidity capture. So liquidity captures will only be shown by our liquidity IQ indicator, and it will do this completely independently of MA rush. Okay. Lenny, last week was, yes, last watch list was from the 17th of August. Yeah, today we're gonna create a new watch list, Lenny. Lenny, let's take this question offline. I can't really read this whole thing. I don't have any Nicholas to read it out for me. Let's send me a note, Lenny, afterwards. We can address this question maybe in the lunch and learn next test. Palantir is in a similar position as Sprout. I don't think so personally, because Palantir, from a technical point of view, well, of course, there's some similarities. First one, of course, yeah, they're both bullish. But okay, that's, I guess, the main similarity, because from a support and resistance point of view, we are now below the support level, which personally I don't like too much. We broke it, came back up, then retraced off it again. This is a zone break retrace set up to the downside. On Palantir, PLTR, yeah, it's a bit different. If you look at the factors, here we are clearly still even above resistance. We had our zone break here, a bit of a retrace, bullish zone break retrace, and then we really took off. Just a pullback a little bit, but we are nowhere below support. So that's, to me, a much more bullish setup in Palantir right now, just by looking at these levels. But of course, I'm still hoping that Sprouts will turn around. But I'm going to be careful. I'm going to be closely watching it to see what's happening soon. Okay, good. Where are my questions? There we go. What is the difference between a zone break retrace and the bear flag? Yeah, I mean, a bear flag typically is when you have a very strong move down and then some consolidation. So if I were to characterize a bear flag, let me just see if I can find a good one here. I mean, even on Palantir, if you were to point this out, you could say, hey, this is a starting bear flag. We go. Second, wait. And you know me, I'm not the nicest flag drawer. I tried this once with this could be a bear flag too. Big move down, and then we have a consolidation here. But I mean, we have to see how prices what they will do in the next couple of bars. But if this continues like this in this tight range, that would be considered a bear flag, like the flag post here, and then the upside down flag here. For Sprouts, once again, I don't think it's, yeah. I mean, I guess you could argue the same thing. Yeah, flag post. Come on, flag post here, and then some kind of flag formation here. Maybe it's. I mean, in the end, it doesn't really, yeah, matter how you call it. But I agree with you. It's a bit of a bearish setup right now. So I would personally call this a zone break retrace. We broke support here, went initially down, then a bit up, and then there might be a big follow through. And if you look at this slide here real quick, and then we're gonna start our scanning process, it's this setup here. 1 second, this one. Exactly the same thing. We break support, zone break. We initially go down, then we come back up towards this broken support level, which is now acting as resistance, and then it really powers down to the downside. This, of course, I want to avoid with Sprouts. So I'm going to be looking at it a bit closer. I still think the verdict is not out yet. There's still hope, especially since that overarching trend is so bullish here. It's such a bullish stock. So, I think zone break retraces to the downside are more for stocks which are bearish to begin with. All right, so now let's start scanning for some new setups. And for this, we will start with a classic. One of the classics, which is called the bullish bounce setup. And there are three to four ingredients for finding such a setup. Ingredient number one is we want the stock to be bullish to begin with. We want the overarching trend to be up. And the longer it's been up, the better it is in my book. That's ingredient number one. Ingredient number two, we want price to approach a key support level, ideally paired with a recent liquidity capture event. That's ingredient number two. And then ingredient number three, somewhat optionable. So this could be something, perhaps an up gap or a gap to be filled to the upside. That could be one. Or perhaps, lots of room to the upside because the next resistance level is quite far away. This bounce has a lot of room to go. So all these extra factors that you may consider, which could add some extra evidence that, hey, we're actually going to see a bounce to the upside. This could also be a nice level for a pullback on trend rate up. So all these things could be the extra, or the X factor for a successful bullish bounce setup. So how can we scan for those? Well, very easy. We're going to go back to our dashboard here. When I clear out the scanner, and as you can see now, we are currently tracking more than 5,600 stocks. Now we've added quite a few stocks to it. And by the way, a bit of a preview of what will be coming up soon is we will have something in the settings up here. It's not implemented yet, but it will be somewhere here. We can configure which stocks you want or which symbols you want to see. Because I understand that, some stocks like this one here, A2A dot whatever, MI, maybe it's a stock that you're not interested in. Or perhaps this Australian stock is not something you're interested in because that's not a market that you follow. We're going to have a setting up here where you can, hide some markets and perhaps enable some other ones, just to keep this a bit clearer. All right, so that's coming in the future. All right, now let's scan. Okay, so what we're going to do first, we're going to configure our scan columns here so we can see everything in one screen. And for this, I'm just going to hide the exchange. We don't need it. I'm going to hide this volume delta, not needed for today. And in fact, we're going to hide all these things here too. This is some other features which we're working with. And now we only have these columns just to begin with. And I'm going to also enable our corporate actions indicator. All right, which shows us, by the way, when are the earnings coming up? When are the new dividend X dates coming up and so forth? So this is helpful to see this directly on the chart. Well, we do have a column for this where we can scan for it, but sometimes it's nice to see it visually on the chart as well. Okay, so with this, let's start scanning. So ingredient number one, you may remember, is we want to see a long-term bullish stock. And for this, we're going to use our MA Rush column here and the associated filter, which allows us to filter by only bullish stocks. Once I do this, you can see all these, arrows in this column. They are all pointing upwards and they are all green. We can see also here that from our 5,600 stocks, 2,700 stocks are currently bullish. So you can see pretty much 50-50 between bullish and bearish symbols in our dashboard right now. All right. So we also see next to this up arrow a number. And this number indicates trend duration. For how many trading days has this stock been trending up? And as I said before, the longer, the better. So the next thing I'm going to do, I will sort by trend duration by clicking on this column. So I click on it, and I will sort from highest to lowest. All right. So for example, here we can see, I want to skip these currencies here because I'm not so interested in these one. But for example, Sensora, just picking this one here, is bullish for 1,328 trading days. Very bullish. Actually, it just bounced off this key resistance level. Really kind of interesting with a liquidity capture event. All right. So that was ingredient number two. And ingredient number three is we want the stock to be near a support level. How can we scan for this? Well, very easy. We simply use our filter here, the Liquidity IQ setup filter, and select long bounce. We have all kinds of scenarios here, but long bounce will be the first one we're going to look at. Long bounce means the stock is trading near a key support level, such as LLY, Eli Lilly. We mentioned it before. a stock which is right now in this key support level. And if I enable labels on the chart, actually 1 second, I still have my drawing mode on. Let's see if I can delete this somehow. Come on. Bear with me. There we go. Okay, now it's better. Okay, so I'm gonna enable labels real quick. You can see, okay, Eli Lilly, yes, is right now next to a support level. But truth be told, for the bounce setup to be a clear and pure bounce setup, this actually would not fully qualify. Why? Because our prices were approaching this level from the downside, from below. This is actually not what I want. For a bounce setup, what I want is I want prices to come from up top to the level, like here. Prices came from here down to this key support level, and then we see a bounce. Or here again, up top, down to the level, and then we see a bounce. This is the setup I'm looking for. Not so much this one. Even though I like Eli Lilly, I do feel this gap might be closed next week or next 2 weeks, but for a different reason. Okay, so in fact, I'm gonna add it to our watch list, but for a different reason. It's not a pure bounce setup, but I really want to follow up with this next week to see if this is happening. I'm curious myself. So what we're actually gonna do is I'm gonna start a new watch list. As you know, we always are creating a watch list for this. So I'm gonna unshare the oldest one. And I'm going to now create a new one. Setups, column 2025-08-23. I create it. And the first thing I'm going to do, down here, I will share it with you guys. So I have this button, which allows me to share a watch list with our community. And whoever has access to the dashboard will be able to see this watch list in your account, along with all the symbols that we will be adding to this watch list. Okay, so now this watch list is created. I'm going to add Eli Lilly to it. I want to keep an eye on it. I like it a lot. I'm also going to keep an eye on WW Granger. Again, a similar setup as an Eli Lilly. We are coming from below to this support level. It's not the pure one, but we still have a gap to fill. Out of curiosity, I just want to see what's going on there because I believe in this gap fill method, especially if the gap fill process has already started. Oftentimes, then it's going to follow through and fill this gap. So I'm going to add it also to our watch list just to see if we can fill this gap. So adding this one as well to our list. And of course, both ones are interesting short-term bullish setups. Yeah, leveraging the gap fill idea. Marsh and McLennan. Unfortunately, the first 3 ones, yeah, a bit of all the same thing. Here we are coming from below to the support level. It's not the pure play. I'm going to stay away from this one. See what's happening here because it's not impossible. This may result into a zone break retrace setup where we're going to bounce up to the bearish side again. So here I'm going to wait a little bit. Then we have one Indian stock here, Sun Pharmaceutical Industries. Same thing, we're coming from the downside, skipping this one. But now, thanks for bearing with me, Reliance Inc. will be the first one, which is of interest. Okay, what do we see here? Well, first off, we were coming from the upside down to this level and we are consolidating. And yes, Lenny, you will tell me now, Daniel, come on, this is a clear bear flag. And yes, it looks like a bear flag. I agree. Such a bad flag draw. It looks like a bear flag. And yes, just by looking at this, one may argue, okay, we're going to bounce to the downside. But you could also argue, okay, we stopped right at the key support level. At this key level here, and we may be bouncing off now to the middle, towards the middle in between support and resistance. Both are possible. Of course, you have to be a bit careful, and I also don't like the fact too much that the sector this stock is currently at a short bounce setup, meaning it's right at resistance. So if you look at the XLB, which is the basic material sector, we can see we are right here at this resistance level, at this resistance zone up here, and it is not unlikely that we're going to bounce off this level. I really need to clear these drawings. It's not so easy to handle this. There we go. Okay, so if the sector bounces, perhaps all these stocks in the sector tend to be to some degree correlated with the sector ETF. Maybe RS will also bounce. So we're going to add it to our watch list, but just be careful that, hey, we may see another leg further down. So I'm going to add it no matter what. All right. Okay, then another Australian stock here. Just a quick look what this one looks like. There we go. Oops. It's a little bit bigger. Doesn't want to. Doesn't matter. Okay. We see it here. Yeah. Interesting one, actually. I'm not sure if somebody's trading these Australian stocks, but that looks to me like a nice bounce set up off this support level. And the cool thing here is that we're actually coming from the upside to this level that's been holding. And we have a liquidity capture on the last bar as well. So definitely an interesting one. I'm going to add it. I don't want to have too many Australian stocks in here because that's probably something that you don't trade very often, but every once in a while, having a foreign symbol is not the worst idea. And one more, perhaps, WMB, the Williams companies in energy. Yeah. Also, interesting one. We came from the upside towards this level. It held. We went a little bit below, but it's always a zone. And then we bounced up. And this could be definitely an interesting stock for a long entry. Let me just quickly see what's going on here. Yeah, definitely in a sideways move here. But if you want to speculate, the overarching trend for sure is bullish. Earnings are still far away, so no many surprises there. You can speculate, okay, we're going to bounce off this level towards the upside, towards this resistance level around 61. So we're going to add this one as well to our watch list. All right. And perhaps one more, the Unum Group. There we go. How does this one look like? I like it. You see it already here. We had this for quite a while as well. Again, Lenny will say, hey, Daniel, a clear bear flag. Yes, perhaps. But also we have a big gap here, which is screaming to get filled. It's just taking its time. Yeah, the stock is falling asleep here during the summer. I still feel that there will be a bounce coming towards the upside and an attempt to fill this big gap here. And if it does, prices need to go up all the way here to the 80 area of price. So we're going to add this one as well. All right. That was our bounce setup. Now let me see if there are any questions coming in. There we go. Okay. Is it possible to post your slides? Yeah, I guess we can. Lenny, send me an email. I sent them to you as a PDF. Ravi, I'm new to your website and products. With so many indicators and products, how can I make a decision on which product to buy? Even the Power Bundle 360 has 3 methods. Yeah, Ravi, that's a great question. Join us at our tech talk on Wednesday. And Ravi, please send me an email if you are not on our distribution list yet. By the way, on Wednesday, we have a big tech talk about deciphering the market story. And Ravi, what we're going to do there is to give you a full overview of our indicators and a logical progression as to where to get started based on your trading style. So please join us there. This is Thursday at 6 p.m. Eastern. Okay. David, why is LLY considered a long bounce when price is coming from below? Yeah, it's, as I said, it's the scanner will pick it up as such because price is near this level. There's no logic in the scanner here to determine whether we are coming from above or below. That's why. But that's why where your own discretion comes in a little bit. All right. VJ, what MAs are on the chart? Yes, good question. So these MAs, VJ, are proprietary MAs. They are based on multi-time frame calculation. They're in essence, volume-weighted averages using multi-time frame analysis, but there's no clear answer. Like it's an EMA of period 20 or something. Steffen, when do we see the additional info in the sector column on our scanner? Oh, yeah, Steffen, it's easy. You have to enable it. So this stuff here, we call the sector information, like in which sector the stock is in, what is the sector doing, if there's a setup for the sector. Go to the settings here and enable sector information. So by default, it's disabled because we like to keep our dashboard simple and clean, but you can enable it via this information here. All right, perfect. And Lenny, we don't have statistics, Lenny. So it's just anecdotal evidence. And this is how we trade based on I believe, some basic principles of technical analysis, like what is the trend doing? Are we near support and resistance? What's volume doing, and so forth. We'll all be, yes, you will get the invite for the Thursday webinar. Cool, perfect. All right, so these were all the questions. Now let's move on to our next setup. And you may already guess what it is. It is one of my favorite ones. It's called the zone break retrace setup. Why do I like it so much? Well, first off, everything comes to an end eventually. No support zone will last forever. No resistance zone will last forever. But if they are broken, also opportunities arise for us as traders, because then we can, place a breakout trade, anticipating that price will continue in the direction for a bit longer, and we can capitalize from this. So we can see it here. Support was broken and then price continued in the breakout direction. But there's one caveat. This is where the zone break retrace setup comes in. The caveat is oftentimes the market tries to fake you out. So you can see it here. Prices broke above resistance to the upside. Initially it went up, but then it reversed and came back all the way down to the broken resistance level. And often does it like this. We call it zone break, retrace, and only then prices really continued and accelerated to the upside. So how can we find these setups? Well, quite easy. We're going to go to our scanner here. We will clear out all our filters, and I will select only one filter now in our scanner. It's as easy as this. And you will see once I do this, we are filtering down a lot of stocks. So I'm going to go here to Liquidity IQ setup and select long break retrace. And we only have 16 stocks from our 5,647 stocks currently in this setup. Let's check it out. The first one that comes in here is a stock without even looking at the chart. It's a stock called BBSI, which has been bullish for 1,190 trading days. So that's good. It lately broke above resistance and recently returned back to the broken resistance level. Let's check it out. All right. There we go. Ooh, but that one already took off. Unfortunately, that would have been a nice one to do. Zone break here, initially got up back to the level, but then on Friday, of course, a huge move up. I guess the low of this candle was still in the vicinity of this level, so it qualified, but that one is gone. Don't chase this one, unfortunately. We were a bit too late for this one. Okay, next one, GDG.AX. Okay, a stock in financial services. Yeah, also interesting. Let me just see if we can see something interesting in here. We broke above resistance at this point here on August 5th. Initially, it went up, retraced a bit, up again, retraced a bit. I guess if we are coming down to this zone, around this level here, potentially this could be an interesting long entry because this stock is also long-term bullish. But it's an Australian stock. But nonetheless, I'm going to add it to our watch list. Why not? And perhaps one more, FNDG, the Schwab Fundamental US Large Company ETF. All right, let's check it out. What do we see here? Yeah, this one's also gone. And I think there's some kind of bug in our logic because this should not be qualified. I believe this would have been the stock which would have been the actual setup yesterday, because the day before yesterday on Thursday, because now we're already extended. So this move actually already panned out. Zone break, retrace, and then it moved up. So we're going to skip this one as well. But nonetheless, we did find some interesting symbols here. All right, so. Okay, perfect. Yeah, I'm going to get to these questions in a bit. All right, so now let's review quickly which stocks have we found for the next week. And today, was a little bit more challenging to find some really good setups. But let's go through them, the ones that we actually found. Eli Lilly. Okay, so what's the idea here? The idea is we're going to fill this gap. Let me just put a little arrow onto this one here, arrow marker. So I think we're going to go fill this gap here. It's not the prettiest drawing, but I'm just going to put this here as a reminder that this is going to be a gap fill idea. So we're going to add the stock here as or the screenshot to our trade notes. And once this loads, there we go. Oops. And I forgot to, 1 second. I keep forgetting this. I have to add a new one first. There we go. And now I'm going to add the screenshot here with today's timestamp. Perfect. So we have a nice progression. You can see it here, actually. If you look at your trade notes, we had quite a few notes for Eli Lilly in the past. You can scroll through your notes. Here, this was the one from last week where we anticipate the gap fill, which worked out nicely. Then we had a bounce setup in May, which worked out at that point as well, and so forth and so forth. So you can have a nice history of the setups that we discussed throughout. All right. Yes, W.W. Granger. I think I'm mispronouncing this, but maybe you guys can help me how to pronounce this at some point. Yeah, same here. I think it's just the same thing as we had. Gap fill idea. I'm gonna, keep my eye on this. I think this gap will be filled next week. I'm gonna take a trade note of this, just so we can follow up next week if this actually panned out. All right, now Reliance. I like it. It looks a bit like a bear flag here, but I still think it is possible. Of course, you never know. Who can we've certainly predict the future when it comes to trading, but I do think we're going to see a bounce off this level towards the middle, in between support and resistance. But of course, just in all honesty, what can also happen, move this away, what can also happen is that we're going to go a bit lower towards this support level or this support level. So you have to be aware of this. It looks to me almost that calls might be quite cheap, and this is actually something we're going to discuss on Tuesday. We're going to see how we can price or estimate whether an option is currently cheap or expensive. So that's something we will be looking into using some other tools. And if calls would be inexpensive right now, maybe just, to have a very nice risk managed position, potentially consider calls with an out of the money price, because if that pans out, I think we're going to see a bounce towards this resistance level here. All right, so I'm going to add this one as well to our list. There we go. Okay, close this Australian stuff. I'm going to skip it. I do like the setup. I think it's probably, technically speaking, one of the cleaner setups that we've seen today. Nice liquidity capture here. Actually, I like it. I'm not sure you guys can trade it or would consider trading this, but it's a long-term bullish stock. Yeah, you can see it here. Dividends are coming up. Let me just see. Oh, they just came up. That's fine. Yeah, I think it's an interesting stock. Big move upwards here. There is a gap to be filled here, so you have to be a bit careful of this. Of course, if this gap here, oh no, it was already filled. What am I saying? This gap was filled all the way here. No, this is a good stock. I like it. Actually, I'm going to add it to our watch list or to our trade notes as well. There we go. Okay, the Williams Company in energy. Yeah, same thing. Interesting. Potentially a long entry here. The only thing, and we're gonna do some sector analysis. I did see the question, and the question was, how much do you consider the sectors when picking a stock? So far, I just glanced at it because here I could see, for example, okay, we are looking at a bullish setup of WMB, but the sector XLE, which is the energy sector, is actually bearish for 155 trading days and currently at resistance, which would suggest, hey, it's gonna go further down. If you look at the sector ETF XLE, you actually can click on this one here. You will see, okay, yeah, we are bearish since here, no, January, currently near resistance. We may see another leg further down. So that's a possibility. And if this happens, maybe the sector will drag down WMB in its wake. It is possible. So something to be aware of. And yeah, if this happens, of course, this level may not hold. So this is just an extra piece of information. But nonetheless, I like the setup the way it is. And this is all part of the discussion that you have. And typically what I do, I pick like one stock, maybe two, I trade every week. I pick the best wins of this, and which one the best is, in my view, you're going to see that on newsletter on Monday. But this is definitely somewhat promising as well. Oh, once again, I made this mistake. 1 second. I have to click the plus sign first, then add the screenshot. All right. Unrum Group, yes, we discussed it every week. It's been falling asleep at this support level. I like this gap fill situation here. So definitely going to add it once again to our list for today. even though it's just kind of falling asleep. But I think we will see a bounce towards a gap fill at the 80 level up there. All right, and then we have one more here, this Australian stock, Generation Development Group. Zombie retrace, yeah, potentially, but I'm going to skip it for now. It's probably something you don't trade anyways. If prices come down a bit further, you may look at longs here, especially if this gap here is filled. Prices come down here, potentially longs, and yeah, for another attempt towards higher price levels, because the stock is long-term bullish as well. All right, great. Now let's look at some questions. All right, so what questions came in? You follow sectors. Yeah, I do follow the sectors. And actually a little liquidity view hack. If you go to your drop down here, on top, we have three what we call dashboard watch lists, which are basically shortcuts to some of the some interesting stock selections, like the Nasdaq 100. You have it here, all the stocks in the Nasdaq 100, the S&P 500 stocks, and the S&P 500 sectors, the 11 sectors. And of course, what you can do, if you look at the sectors, you can look, okay, which of these sectors is actually currently the strongest? Put your bullish filter on here and sort. You can see the industrial select sector is currently the strongest, bullish for 674 trading days, followed by technology, communication, consumer discretionary, and so forth. This is something you can consider. Why did you stop the bullish bounce analysis at UNM? UNM, United U. Okay, UNM. Oh, I like it. Why did I stop? Oh, I didn't stop. We discussed it before. It's just that it's a long-term bullish stock. It's at a key support level. It's definitely slowing down a lot, and the reason why I potentially would go long here is first, this is a very strong support level. Yeah, it has not been broken at all. The next level below this would be like all the way here. That this would require really far drops. So I think this level has significance, and we have a gap to be filled, and there's plenty of space to the upside, and it's a long-term uptrending stock. Okay. All right. Okay, some questions here. CMI. All right, let's have a look at CMI. Cummins. Yeah, Cummins for long break retrace. It's just a stock. I typically stop earlier because this one is only bullish for 392 trading days. Honestly, maybe it's not the right approach, but I like stocks which have been bullish for a real long time. Of course, 392 trading days it's not the worst. It's quite a long time. Yeah, since January 2024. A big move up. Let's have a quick look for a zone break retrace here in Cummins. Now we're a bit far away now, so I think there's something off of the logic for our scanner because this is too late now. This would have been the point where you want to get into it. It should have been flagged yesterday. I will actually take this away, and potentially we're going to have a fix for you on Tuesday for our lunch and learn session. All right. Okay, AU. Okay, let's have a look. AU. What is this, Lanny? I'm not sure, but Lenny, maybe send me a note afterwards by email, and then we can consolidate some of your questions for our next lunch and learn session. I think that might be an easier way to progress with this. All right, perfect. So let me see if there are any other questions coming in. Q&A, symbol requests. Oracle, Orla. Orla, it's not Oracle. O-R-L-A. Orla mining. Okay, let's look at the statistics here first. So we are at a magnet zone. We had a liquidity capture at a support level at some point. Okay, and we are bullish. Let's have a look. Yeah. Beautiful bounce here. Actually, I was seeing this liquidity capture 2 bars ago, or a couple of bars ago. We bounced to the upside, and now we're in the middle in between support and resistance. And long-term bullish. And the gap here, yeah, I like it. I like it. That's a nice setup. This gap to get filled here. I like it, Stefan. I'm just look at the long. Yeah, that's a great stock. Thanks for pointing this out. Actually, I'm going to add this one to our watch list too. Thanks. Great stock. Yeah, like it a lot. Beautiful uptrend here. A bit of a consolidation here. Some bit of choppy action. But if you look at the past, uh, this gap here was shortly after filled at this point. And then with another gap now here, we bounced off support. It seems to hold. And now we might be on the way for a gap fill at 1183. I like it. Bappa AI. Okay. Let's have a look. All right. Okay. Bearish for 120 trading days. A gap here right at a support level with earnings coming up. Yeah. I mean, it's not my cup of tea. I don't like to pick bottoms. Who's to say, hey, this is going to be the bottom? We are at support. Actually broke below here. We came back up right at the support level. We have a gap fill here, which is a bit of a bullish sign. It's also a bit of a bullish sign that we are at support level. But the key bearish thing here is that, the trend is down. The trend is currently down for the stock. It is in a sideways. Oh, wow. What a sideways channel here. We are now below this level. If you can't hold this level, I think the next step will be here or even lower. Yeah, I personally would not trade it to the long side for the gap fill. I think it's against the overarching trend. And if we lose this level, I think another push to the downside might be possible. All right. Can this scanner work on Android mobile? Yeah, it works in the browser actually, Lance. So this scanner, I just open it up on Safari or Chrome on your Android. It will scale down, and you can do it either on your iPad or Android, your Samsung, or your tablet as well. That works. There are no restrictions. There's no installation required. It simply runs on the website. Perfect. All right. Well, I think that's it. Yeah, Lenny, please send me a mail. It's a bit hard today because Nicholas is not assisting me today. He's busy with reading a lengthy notes. But next time, I promise we're gonna have a bit more time to go through some of the more elaborate questions. And I can't wait. Yeah, for next week, it's gonna be an interesting one to see. I'm very curious about these gap fills. And a little spoiler for you guys, what we have planned. Let me just go quickly back to my list here. What is in the making right now for a potential release date in October, so 2 months from now, is a gap indicator. But not just that just finds gaps. That's the easy one that comes with statistics, with occurrences, how many times in the past for a particular stock gaps has been filled. At which point of a gap fill, like it's already half filled, like in, let's see, Eli Lilly, how many times if the gap is half filled, we actually see a complete fill. Stuff like this, I think, can be incredibly powerful because I believe in some sense, this is where the algos are looking for too. They're anticipating this, and this is where they would book profits and so forth. So I think this can be something that really gets you another piece of information, which we currently just use loosely, just looking at the chart. So that's something coming up in October. Nicholas is working very hard on this, like we all are, and we'll see what we can come up with. All right, perfect, guys. With this, have a great weekend. Yeah, take some time off, recover, and we will be back on Tuesday with our lunch and learn, and then on Thursday with our tech talk about deciphering the market story. All right, and one last thing, if you are interested in our dashboard, this is the link here, tradingindicators.com/view. Sign up for a full week of a free trial. You will not be charged, and afterwards we have interesting monthly and yearly options. And lastly, if there was a question which was not covered, send me a note via our homepage, tradingindicators.com. Click on support, then contact, put your question into the contact form. It will go straight to my inbox, and I will answer every single question personally. Until then, guys, have a great weekend. Talk to you soon. Bye-bye.